And welcome back to Dukascopy TV. I'm Monica Gibson and I'm joined in the studio by Ayoob Rawat from ClearVision. Ayoob, thank you very much for coming back in.
Thank you for having me, Monica.
Now, the last time that you were with us, we were talking about the importance of wealth management to the Swiss economy, but also the challenges. So could you tell us about how some of those challenges could be overcome by wealth management businesses, please?
As we discuss, wealth management is very important for Switzerland. Boston Consulting Group predicts wealth management will continue to grow at a compounded rate of 5.9% for the next foreseeable future. And as you can imagine, this generates tremendous amount of revenue. Swiss private banking and wealth management is a very important brand which will continue to be well known internationally because the businesses, the supervisors are taking actions to protect clients, to protect businesses, and to make sure that the reputation of the sector is protected. Wealth managers have to basically make sure that they don't rely on third party for their own business development. So what they have to do is concentrate on growth and manage their costs. And we'll get the opportunity to look at how specific actions can be taken to achieve those.
So in effect, Ayoob, do you think that wealth managers have to adapt their business model in some way?
As we saw last time, they have to make sure that trust, if it is not already there, is maintained. And we saw that there were the core element of wealth management that they have to make sure they inbuilt into their business. These were what we said KYC, but I look at it on a bigger way and I say it's know all about your client. And then we saw the necessity for being transparent and to communicate throughout the relationship. We looked at risk management and we look at performance. So yes, these are the core elements, but they need to differentiate themselves from their competitors, and we will look at some of the action that they may take to allow their business to grow in this difficult period, challenge period.
So what are some of these actions? Do you think that perhaps IT plays an important part in coming over these challenges?
As we say, as I said, you know, the two areas they have to concentrate on is growth and cost income management. Now, growth, what is happening is that you have a lot of international already in very growing sectors in the world, but you have those who are probably smaller, who are concentrating on their assets in Switzerland, but they need to concentrate now on cross-border opportunity. Now, cross-border has changed. It's no longer money coming in, it's basically offering services to third-party financial centers who want the Swiss wealth management expertise to contribute to their own economy. So that is one part of it. Now, there's no point in growing, Monica, if at the end of the day, growth doesn't generate profit on the bottom line. So cost income, which has been the preoccupation of many players in the sector, has got to be basically managed. Cost income, as we saw last time, has exploded because margin has shrunk. So there are certain actions that, as you rightly say, that technology, implementation and managed services can assist in making sure that cost income is within the right ratio to allow profit to continue to grow in line with business growth.
So what's the difference? Can you tell us more specifically some of the IT options that are available?
IT solutions today are available to assist wealth managers throughout their investment process. Wealth managers have got to change their mindset, which has been do it all in-house and do it all. Now, by all means, concentrate on your core activity, which is client acquisition, client services, market research, and investment. But non-core activity like accounting, like IT, like human resources should be, shall we say, delegated in a managed way. So IT today do provide solutions if only the wealth managers were willing to look at it in an open way and not concentrate on trying to do it all in-house. The advantages are numerous. It allows, as we said, it allows growth because it releases resources that are being taken away from concentrating on client growth and acquisition and managing clients, because it's a permanent requirement in this profession. Managed services allow risk to be transferred in the sense that, as you know, technology requires a lot of investment, requires a lot of continued management, and as such, by outsourcing it or giving it to a managed service company, the risk is being shared. In my opinion, the future of wealth management is positive. There are a lot of obstacles ahead. Wealth managers have got to, shall we say, differentiate from the mainstream because, you know, that is what will attract clients. As Capgemini said, and I completely agree, though I've tweaked it a little bit, those wealth managers who are going to prosper in this new world, in this new economy, are those that concentrate on becoming virtual repository of their client assets through data that they can access through a few clicks, and also give their clients access to those information on an ongoing basis.
So obviously it's something that works both ways and is advantage to both the customer and the wealth management professionals as well, it would seem.
It goes without saying, at the end of the day, it's got to be that way. The way you've put it, Monica, is absolutely the way it has been for many years in Switzerland, and that's why it made the success of private banking. Over the last 10, 20 years, there's been a diversion away from this approach, which has been, we win, but we have not necessarily looked at whether the client also is winning. The client is asking for transparency, is asking for more information today than in the past, because they see it on the radio, they see it on television, they hear it on the radio, and you know, especially the younger clients have access to, you know, internet. They are permanently in discussion with colleagues, and they always have a cousin or a brother-in-law who is also making money. So at the end of the day, you're absolutely right. It's got to be win-win, both parties.
It does seem as though wealth managers have to up their game a little bit, but thank you very much, Ayoob, for your insights today. It's great to hear it from the perspective of yourself in the industry.
Thank you very much for having me, Monica.
No problem at all. Well, that's all from Ayoob and myself for the moment. Click back to Dukascopy TV for plenty more exclusive interviews, press reviews and fundamental analysis. Goodbye for now.